Hello, welcome to class, and this is cost and management accounting class, and it's a 10 module course that will be taken one after the other, and that means we are going to have 10 topics and 10 videos like this that will take one after the other based on each module. Today we'll be talking about introduction to cost and management accounting. Introduction to cost and management accounting. And when we talk about it, it's going to reflect the basic understanding of what costs and management accounting is. And in doing that, we'll look at the meaning, the nature and scope of cost and management accounting. We look at the objective and importance, the differences between financial costs and management accounting, and we look at some cost concepts and classification. We look at the element of cost and the role of cost accountant in decision making. Cost accounting, cost and management accounting provides the financial and non-financial information that are needed by managers to be able to aid their planning, controlling, and also making informed decisions. And it goes beyond financial reporting by focusing on internal operation, the performance analysis, and efficiency improvement. And in today's competitive business environment, it's characterized by globalization, digital transformation, and sustainability concern. This cost and management accounting plays a crucial role in achieving organizational success. It supports strategic planning, budgeting, cost control, and performance evaluation across manufacturing, service, and public sector. What do we mean by cost accounting? It is actually a systematic process of recording, classifying, analyzing, and summarizing all costs incurred in the production and distribution of a particular good or service. It is the systematic process of recording, classifying, analyzing, and summarizing all costs incurred in the production and distribution of goods and services, and it aims to determine both total and unit costs, identify waste, and also assist in pricing and cost control. An example of this is in a furniture factory. Cost accounting involves tracking expenses such as the timber, which is the direct material, the carpenter wages, which is the direct labor, and the factory rent, which talks about the overheads, to compute the cost per table, and the information guides management in improving productivity and profitability. On the other hand, what is management accounting? It is the use. Um, it uses financial and cost data to support planning, decision making, and controlling within an organization, as it integrates accounting, the economics, and statistics into analyzing and interpreting information for managerial use. It focuses more on the future, providing forecasts and profitability analysis to guide decision. An example of this is a company may use management accounting reports to decide whether to expand production, outsource outsource activity, or launch a new product line. And the nature of cost accounting, cost and management accounting, it actually examines costs data to uncover inefficiency and performance gap, and that's on the analytical. And also the nature, another nature is the interpretive, which talks about it converts figures into insight for managerial understanding. Another is quantitative, it's quantitative and qualitative nature, which combines numerical data with non-financial indicators such as customer satisfaction. Also, another nature is a dynamic. It's dynamic, and this talks about that it evolves with changes in technology, competition, and business practice. And the last is the managerial and focus. Talking about it serves internal users and not external shareholders. The scope of management, cost and management accounting includes cost ascertainment and control, budgeting and forecasting, decision-making support, performance evaluation and reporting, and the last is the inventory and resource management. What are the objective and importance of cost and management accounting? Let's take the objective first. The first is that it determines accurate unit cost of production. The second is that it facilitates control through variance analysis and standard costing. It also provides data for managerial decision making and performance assessment. It assists in budgeting, planning, and profitability analysis. And lastly, it promotes efficiency by identifying areas of waste and reduction. And its importance is in the in that it improves accuracy of business decision. It also encourages financial discipline through budgeting. It enhances strategic planning and competitiveness. And lastly, it promotes accountability and transparency, especially in public institutions. We have the various differences between financial cost and management accounting. When we talk about financial accounting, as per purpose, it's an external reporting, using of external reporting to investment, investors and regulators rather. It's the purpose is for external reporting to investors and regulators. And for cost accounting, it's actually determine and control cost of production. And for management accounting, it's to provide information for managerial decision. And as per the users, financial accounting users are the external stakeholders. The cost accounting users are the internal managers, while the managerial accounting is also the internal managers. And in terms of time focus, the financial accounting is historical, that is, it deals with past data. That of cost accounting and management accounting deals with past and present. And in terms of reporting, the financial account report using financial statements, and that of cost accounting makes use of cost sheets and variance reports, while management accounting make use of budgets, forecast, performance reports. And lastly, the legal requirements, under financial accounting, it's actually mandatory, while under cost accounting and management accounting, and the legal requirement is optional. Cost concepts and classifications. Cost concept and classification. We've been talking about cost, and cost. What are the concepts and classifications of cost? Cost is the monetary measure of resources used to achieve a particular objective, such as producing a good or service or rendering a service. And understanding cost help managers to be able to price products, control operation, and make investment decisions. And the major classification of costs is by elements, where we talk about the material, labor, and expenses. We talk about another is by function, which deals with manufacturing, administrative, selling, and distribution. We also have by behavior, which talks about the fixed variable and semi-variable. Another is by control, which talks about controllable and uncontrollable costs. Another classification of cost is by relevance. It has to do with relevant and irrelevant costs for decision making. And lastly, by normality, which section costs into normal, which is expected, and abnormal, which is unexpected costs. The elements of costs, we have the direct material, we have the direct labor, and we have the direct expenses and indirect costs, which is the overhead. When we talk about direct material, it's actually a raw material identifiable in final product. An example of this is wood, flour, steel. And when we talk about the direct labor, it's actually the wages of workers directly involved in production. Example of these people or the workers are carpenters, tailor, machinists, and some others. We have the direct expenses also, and these are costs directly traceable to a job or order. Example are royalties, special tools, hire, and some others. And the last is the indirect costs, talking about the overhead. And this is an expenses not traceable to specific job, and these include the rent, electricity, supervision. They cannot be traced to a particular job. In conclusion, cost and management accounting is the backbone of managerial efficiency, helping organizations to plan, control, and make informed strategic decisions. And it enables business to adhere to cost, efficiency, profitability, and sustainability in competitive environment. Thanks for listening.